Good day, ladies and gentlemen. In this video, I'm going to be teaching you a powerful swing trading strategy, okay? A swing trading strategy. So if you are the type that you don't really have time to always spend on the charts and you would love to trade, then swing trading is the best for you, okay? So you only do your job once and then you wait until price gets to your point of interest before you actually enter. So this is a trading strategy that does not require you to always come and check the chart, okay? So what you need to be a very good swing trader, you need to be excellent at something we call higher time frame analysis, okay? So you must be able to use higher time frame analysis, multiple time frames. All right, so you need to check what's happening on the higher time frame, go down to your medium time frame, and then you look to execute on your point of interest on the lower time frame. So you need to be able to juggle these time frames. All right, but the only good thing about swing trading is you won't do this every time. You do it once, you know what your point of interest is, then you wait for price to get to that level. But you need to be able to do your top down analysis very, very well. It's absolutely important, okay? So let's go right into it. So you can see right here, I'm on the daily time frame, which is a big time frame. That's D1 up there. All right, so you can start from your daily, you can start from your weekly. It depends on the type of swing trader you want to be, okay? If you are a position trader, that's when you have to go on to the monthly time frame, okay? If you just want to be a normal swing trader, in my opinion, you can start from daily time frame. You don't necessarily need the monthly. Weekly is optional. Weekly is if you just want to maybe just have a pictorial view of the trend, of the bigger trend, okay? I don't think it's very necessary. Daily is a good place to start for swing traders, okay? So this is a daily time frame. Every candle here represents a day, okay? So on euro card, let's see what is going on the daily time frame. As you can see right here, I can see that price was actually moving in an uptrend, giving us higher highs and higher lows. So this is an uptrend fashion, okay? So price giving us uptrend formation. All right, I can see there is an order block right here, okay? There's an order block right here, and I want to copy this horizontal line. Okay, so what happened? Price pulled back into the order block and pushed up again. So it's still showing us that yes, price is still in the upwards movement, okay? But I can see signs of the weakening uptrend. So I'm doing the analysis right now. So you just follow my thought process. I can see that the uptrend is getting weaker, okay? Why is it getting weaker? And why do I think it is getting weaker on this time frame? Right here, there was a break of structure showing you that yes, the uptrend is still fine and good, because for an uptrend to continue, you need to see a break of structure in the upward direction. All right, but you can see that when price returned into this order block and pushed up, it did not break structure, okay? It failed to break structure. So this is number one sign that price is weakening in terms of its upwards momentum. So you need to derive information from these bigger time frames. It's going to guide you on searching for your point of interest, okay? So I can see that there's a weakening in the momentum of the upwards movement. And what now happened? That particular order block that we entered on, price broke and closed below it. So this is another sign that there is a change of character. Or okay, there's a change of character. Now, as a smart trader, what is that telling you? It's telling you that there's a possible movement to the downside. We're about to change from all those upwards push that we saw earlier to a downwards push, okay? Forget the fact that you are seeing bullish candles going back to back here. You would want to zoom in to see what that bullish candle is going towards. And right here, what do we have here? I can see a fair value gap right here, okay? So this is the possible what's it called, PD array that this particular set of bullish candles is going towards. So you would be a rookie trader to say, oh, this is an uptrend because you see a lot of bullish candles. No, it's not an uptrend. The candles are only moving upwards because they're actually trying to get into what we call internal liquidity. which is represented by that fair value gap. So let me mark out the daily fair value gap that we have here. Look at this. This is a daily fair value gap, a big daily fair value gap. Okay, I think price has even touched it. Okay, so price touched it, and you can see the way it's reacted a little bit in the downwards direction. Okay, so this is all the information I can actually derive from this daily time frame. Now the information in just one sentence is that price was moving in an uptrend before, but right now it's changing character and it's about to go to the downtrend. So I'll step down to a lower time frame to H4. Okay, so this is the next time frame below the daily time frame, and this is the H4 time frame. So on the H4, what am I going to look for? On the H4, I'll look to refine my entry. Okay, so I'm trying to refine the entry to see, you know, what I can find on the H4 time frame. And if you zoom in very well, okay, you would notice that there is a smaller fair value gap within the bigger fair value gap, because you're not looking to enter trades on the points of entries you see on the higher time frames, because if you do that, your stop loss is going to be outrageous. Okay, so I'm trying to refine this fair value gap, because on the H4 time frame, I can actually see a smaller fair value gap. You can see the wick of this candle right here did not intersect with the wick of this other candle. Sorry, with the wick of this other candle. Let me see if I can change the color. I want to change the color so that it's not going to confuse us. Okay, let me change it to purple. All right, so save. Okay, so copy this. Okay, so let me delete this one. All right, so you can see a smaller fair value gap, okay, within the bigger fair value gap. So that smaller fair value gap is going to be the fair value gap I'm going to utilize. Okay, but I can still step down to H1 time frame. I can step down to H1 time frame and see what's going on within that fair value gap on the H1 time frame. Okay, all right, so this is where the fair value gaps are. And within the H1 time frame, I can see a smaller fair value gap again. You can see the way I'm doing zone refinement. This is called zone refinement. If you're a good top-down analysis trader, you would understand zone refinement. Okay, so this zone refinement that I'm doing right here, I want to copy this. Okay, so I think I have to change this color also. You can see the smaller fair value gap I'm marking out. Okay, let me change the color to red. Okay, now I know the question in your mind and I'm going to answer that question. I know the question in your mind and I'm going to answer that question. Now this is the smaller fair value gap within the 4-hour fair value gap, that is within the daily fair value gap. Now the question that you might have in your mind right now is, now that we have so many points of interest, you can see the way I've refined it so small now. My storage space is almost full, so I have to round off the video fast. Okay, so you can see the smaller fair value gap now. That is where I'm looking to enter my trade. Okay, but the question you might have in your mind is, now that you have so many points of interest, which one are you going to use? Which one are you going to actually expect price to get to? Because you might be thinking it's going to get into that smaller red fair value gap, whereas it's just enter this big daily fair value gap without getting there, and price will just shoot to the downward direction. This is where your knowledge of candlestick patterns is going to come into play. Okay, so you are combining two things. Of course, I have all of these fair value gaps here, which I'm looking for price to actually enter, you know, and give me a reaction. But I'm not going to enter my trade until I see a candlestick pattern. Now that candlestick pattern could be a bearish engulfing. Okay, it could be a bearish engulfing candlestick. All right, it could be a shooting star. All right, it could be any candlestick pattern that gives you a reversal ideology. So that is what you'll be looking to enter your trade on, and that candlestick pattern has to be on either H4 or H1. Don't go and be looking for the candlestick pattern on 5 minutes, no, or 15 minutes, no. It has to be either H1 or H4. So that gives you a solid, because candlestick patterns work better on higher time frames, H4, H1. If you are looking for candlestick patterns on 5 minutes, it's going to give you wrong signals. All right, so basically, once you enter your trade, you can hold it, for 2 days, 3 days, it all depends, 4 days. You can see the daily time frame. This is the daily time frame. This is also an important level I should mark out on the daily time frame. This is support right here, because price found support here, and since price reversed from here and it's going into what we call internal liquidity, it's going to want to come towards external liquidity to come and take out the liquidity below this low. So since these are daily candles, definitely this might take you 5 days for it to deliver, or 4 days. It depends on how big the daily candles print. Okay, so this is a swing trading strategy. All right, I hope you've gotten 1 or 2 hints on how to swing trade. Basically, if you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.